Welcome back, everyone. For those of you who don't know, my name is Wolf. You can catch me online at EveryTimeICash. That's all social media and stock twits at EveryTimeICash. It is Sunday, March 8th, 2020, 9:19 p.m. Market futures are tanking and crashing, whatever explanation you want to give them. Long story short, the Saudis cut their production of, or increase their production of oil even more and cut their prices, and are just basically going to squeeze out U.S. shale producers. At least it appears that way. Oil started to fall precipitously, and that in turn caused another wave of selling in the stock market with the corona fears. We are currently limit down on the Dow, the Nasdaq, the Russell, the S&P futures. Gold spiked, and the oil futures have tanked as well. I wanted to just take a moment here, and I wanted to give you a little bit of input as to how I think of things in moments like this. I wanted to just start with really basics and really straightforward explanations, and I wanted to just give you a little bit of insight to the method of the madness. So in front of you on my screen here and on your screen, you'll see the S&P 500 futures contract. This is a chart from the 2009 until today. There are no lines, there's nothing drawn on it. So I just wanted to give you a little bit of input and give you an idea of how I go about drawing things out and how I go about setting my trend lines and setting my support lines and whatnot. So first thing I'm going to do is I'm going to try to find a common trend here. This is going to be, just kind of like a master trend that I'm going to track to see potential levels of support. So that's the first thing that I'm going to do. I'm going to draw out a line, just a very simple line. If you want to make it a little bit more easily drawn, you can switch to the weekly, and in theory it should be a little bit easier for you. So in front of you here, you'll see the weekly timeline on this S&P futures contract, and I have a trend here, and the reason I started the trend where I started is because we had a bottom in the market back in 2009, signified by this green arrow. So there's a couple ways. Some people like to draw it based off of the bottom. I like to draw it based off of where we actually start to base for our breakout. So as you can see, we started to spike, we came back, we retested. If I were to really zoom in and get granular here, I'd give you this level as a potential breakout point for the market, that in which it started to rally and continued for the last 10 years, 11 years, whatever you want to call it. So had a bottom, had a retest, and then we had a trend. So I've drawn out a trend line here, and as you can see along the way, we've tested, held, and came close. You can call that a test too if you want. And then that is held true all the way until today. So the first thing I want to do here is I want to set an alert using TradingView. So I'll set an alert. Once it crosses, I'll be alerted. And so the first thing that I'm going to look for moving forward in the market itself and in the futures market itself is whether or not this trend line, let me zoom out and readjust it. I don't know why it's not zooming out correctly, but if this trend line will hold, looks like it's gonna just do that for me. I'll reset it here again, zoom out. Okay, so there's our trend, daily basis. Sorry, this is all stream of consciousness and off the cuff. So have my trend line is on a daily basis. I'll want to reset that trigger. So edit. Nope, it's still there. I don't know what's going on. But so I have an alert here set for this trend line. If the market were to break or test or hold or whatnot, I would get an alert here telling me that that is going on. Um, the other thing I could do here, if I really wanted to, is I could try to find a top channel for this trend line, see if it was trading in a channel. My assumption is that it was, but we're not looking for things to be tested on the upside. We're looking for things to be tested on the downside, so I'm not really concerned with the upper level on the market. The other thing I can do is I can then look for other trends that had been in place in the market in particular. So one that I just kind of see offhand, I see that this is one for whatever reason, and I can probably extrapolate it back out to this breakout point. So this is, if you go back to how I started it with, breakdown lows, retest, a trend begins and goes higher. Same concept would be in place here. So we had a sell-off in 2018. There's a low point, and then once we started to reclaim, here I'll just draw it out for you. Once we started to reclaim the support level that we broke down from, is where I would start that new trend line. So I'll just identify this trend line with a different color so that it's a little bit more easily seen. So once we broke down from this level, we sold off. We retested that longer term trend line. We held. Once we started to come back, once the previous support level was retested and held, we can then assume that a trend line took off from there. And that's important here. And if I wanted to draw it a little bit more cleanly, I would do this. And the reason I would do that is because I like to line my trends up with the bodies of the candles. I don't like to use the wicks. That's just me. It's all relative and perspective based anyways, but I find that works more beneficially. But that's important here because, as you can see, once we broke this trend line, we started to accelerate, and then you'll see identified by this green arrow, there's been a battle in place at this prior trend line, this little trend that started in 2019, and that is just a form of digestion. And if you just think of it in terms of a literal tug and war, a visual tug of war, that is taking place between bulls and bears. So there's sellers and there's buyers that are both trying to reestablish strength in the marketplace. So the sellers are saying, hey, this trend line broke. We need to come back down. We need to retest the prior trend or whatever level that they're looking at. And the buyers are saying, oh, crap, we've been in this uptrend since 2019. We need to hurry up and reclaim it so that we can resume higher, so that it's not a major technical break in this trend or whatnot. And the longer that you fluctuate back and forth at this level, the more quickly these moving averages that work both ways. So moving averages work in your favor on the upside and they work against you on the downside. The longer that this resolution takes fold, the more likely that it resolves to the lower to the low side, as the technicals catch up to the price action that's taking place. So very simple, very simply put, this is kind of where I would start. I would then start to just identify prior support levels. So this is one that I see offhand. This happens to be where we are currently limit down. So I'll just identify this with the pink so that everything is different. And then I'll delete this arrow. So I got this, small trend that started in 2019. I got this support level, and then it's a matter of a little bit of a matter of perspective here, but I see a level of support roughly around here, and then I see really nothing else before we get to that prior trend break that happened in late 2018. So this is kind of where I would start, just to identify levels. This is, this is off the cuff. This is not anything that's like overly serious or overly detailed. This is just something to give you an idea of how I would even begin to start to identify levels on a chart when I don't know. If I were to extend this line out, and I would just like take it back, let me take this off for a second. You'll see that this level that we're at currently was the top of the range that we had in 2018 before we broke down. So I'm going to go back and make this pink again. And this is currently where we're at. We're at the top of a range that we had in 2018, where we were sloshing around between this 2820 level and the 2620 level, give or take. So so we had an upside here, we had a low side here, and we just went back and forth before we broke down. Once we broke down, we retested this longer term trend. We held, and then once we held the lows here, the prior lows before we broke down, it was up and to the right with a slow and steady trend line before we exacerbated our trend and moved way too high above trend. Once we break it, usually what happens, like I said, you get a little bit of a tug of war back and forth. Bulls want to reclaim the line so that it doesn't create material structural damage. Bears want to push it down so that we have more trapped bulls and it can create further downside momentum. And so the moving averages and the technicals that worked in favor of the bulls on the upside start to work in favor on the downside for the bears. So currently we're sitting at this upper range. If we were to break this, I would look for, I'm going to put this line back up. I would look for this level. Let me just color it. Let's go with red. And this level is going to be 2740, give or take. If we break this, then I would look for this longer term trend, which is going to alert me anyways. If I were to pull this back, I could probably give you another level to look for here. So that sits at about 2588. So essentially all I'm doing is I'm just marking different levels, and forgive me, I don't have my contacts in, so I'm just when I pause and say let me see what that level is, I'm just literally looking at the screen as closely as I can. So anyways, it gives you a bunch of different levels to identify and to look for in terms of pivot points and in terms of potential support levels. And from there, you can look to see how price action works. Whether you're a bull or a bear, it doesn't really matter. You're just looking for a potential soft spot for you to then trade from. Personally, I don't like to try to catch falling knives. So as of Friday, for example, and I'm going to just take a minute here and show you exactly what I'm saying. But as of Friday, for example, we had a reversal around 3:30 on the back of some Fed statements. So I'm going to swipe over here to my other account. The reason I don't like to catch falling knives is you'll see that once you have major technical damage, so here, for example, is Microsoft, or MasterCard, even if you reclaim a trend line, you'll see, like what I was saying on the previous screen with the futures, technicals work both ways. They work on the upside and they work more violently on the downside. So moving averages are your friend as you go up, as you can see, and then they are violent sells as you hit them on the way down. And in terms of just trend lines in general, why I don't like catch falling knives, because I want to see these trend lines that are broken. I want to see bulls who are trying to recapture trend or trying to create a new trend. I want to see them really prove out the thesis of being able to resume higher. So in the case of MasterCard, for example, um, we're just bouncing into moving averages and selling, and then also we're bouncing into prior trends and then stalling. This is also prevalent in stocks here, and I did this previously. So in Apple, for example, we had this really slow and steady channel, and it lasted from 2016 until 2020 this year. And in 2019 October until recently, we had this more aggressive uptrend that was snapped. So once this uptrend was snapped, and I'm going to identify it here with this arrow, once this uptrend was snapped, personally, and you can go back on Twitter and you can check my tweets and whatnot. Once it was snapped, I was saying, I'm out. I don't need to. You want to watch out for Apple because it has downside risk. So now that it's broke, the same concept of this blue uptrend breaking occurs here. Once you have this channel break, even if we're to get back into it, I don't want to be a buyer until other technical damage that has been done is rebuilt. So I want to see moving averages start to hold support. For me, I use the 5-day and 20-day. I want to see both those hold the support, and then I want to see them start to shift and move back towards the upside before I start to say, okay, there's a potential bottom in place. Because all you're really doing when technical damage has occurred, like I said, is you're creating a tug of war between bulls and bears, and any uptick into what is now resistance, just if you just think of it as this, I'm going to draw this, I'm going to drag this line up. If you just think of this line here, this pink line that I have here, if you just think of it as the underwater mark, so anybody who bought above this gap is stuck, and anybody who buys below this gap is not stuck relative to these people. So anyone who's buying here in this tug of war is making the bet that they're going to be able to reclaim this trend and move higher. Well, as you get closer to this gap low, anybody who bought up here is going to say, oh, well, I remember when it was trading down at this level, or remember when it was trading down at this level, or whatever the case. Let me just get out so that I don't see it retest those levels and lose money again. Or if they held it from here and then they got down here and they bought more, they'll want to at least dollar cost average the other way, where they want to just unload whatever it was that they bought for a trade and keep their original position. Or they'll want to say, hey, I averaged down when I was lower, let me just get out and limit my losses. So Friday we had this headline and we rallied, and there was a lot of people who had these opinions. Oh, we just tested near the lows on the market, we held. But if you just looked at certain stocks, and Apple being one of them, you traded just back to the break point in a lot of these stocks. So in Apple's case, we just traded right back to that breakdown point on that longer term channel. And then if I just show you another one, for example, Google had this multi-year range. We broke out. Once we broke out, we were up and to the right. Well, Google was bought back, and it just traded right back to that 200-day and right back to that top of the range where it failed for several years, for 2.5, 3 years, whatever it was, and we stalled. So now we're sitting at limit down. We stalled at prior resistance. It's probably going to open back down lower. The next level you'll want to see, for me, I want to zoom out and I want to look at, let's say a weekly basis. I want to extend this trend line for Google, and I'll just want to mark it, and I want to see how it behaves at this longer term trend line. So for all intents and purposes, it could open at this trend line tomorrow, and I'll want to see how it behaves. And that's just ideally how I want to play a market like this, or how, not necessarily how I want to play it, but how I want to view a market like this. I'm perfectly okay with individual stocks and with the market as a whole. And I'm going to pull up the market here. I'm perfectly okay with, and here's another example. So you'll see it rallied right up until that trend line failure, and then it stalled. And so as of Friday, there were people that got in thinking, oh, I got in close enough to the lows, and come tomorrow, they're going to be washed out right back down to the support line. And if I zoom out over here, I pull up my SPY chart and I zoom out once it loads, you'll see that previously, I'm going to make this just a regular chart because this is not logarithmic. You'll see that on just a simple basis, not a logarithmic chart, one of the levels that I'd flagged was this 260 level, and we are looking like we're going to test it. And if you zoom out, you'll see that this was this pattern that had formed, and anytime we touched the top, we sold, and anytime we touched the bottom, we held. So we'll see how it holds, and I'll want to see that. And if it fails there, then I'll want to see this megaphone pattern hold. And if it fails there, then we're looking at, more dire things, and the prior all-time high being support. So this is just a 20-minute off the cuff, like no real planning here. Just wanted to give you a little bit of insight and show you what it is that I look for. And I just wanted to say that it's very important in markets like this. So for the last week and a half, I haven't really done much personally, and I've been an advocate of waiting for things to show you that they have gotten better, or waiting for a confirmation to the downside. With the VIX where it's at, and with the way things have been trading, and with headline to headline, and Fed catalysts, and Trump catalysts, and Corona catalysts, like, it's just way too chaotic and way too painful to try to catch a falling knife. And it's a lot better to just simply wait for things to prove themselves to you, and better be late to get in, especially with volatility where it's at, than to be early. If I'm late, volatility will compress a little bit, and it won't hurt me being as late as I can be. Whereas trying to catch this falling knife, you're gonna see and you're gonna hear in the next couple of days, likely, that a lot of funds and a lot of individuals and a lot of traders are getting blown up because they're either over levered, or they're trying to catch falling knives, or they're not trading the way that they should be, and it's going to be a sad state of affairs, and it's something that you want to do everything within your power to avoid. So for us, we're sitting, S&P 500 is sitting, the futures are sitting at limit down currently. They're sitting at this level, highlighted by pink. Personally, I want to see this longer term trend test and hold. And for me, I want to see like multiple days of it being held. And then we can talk about a potential resumption where I'll want to see profit taking take place at this pink line, potentially at this breakdown point, potentially at these moving averages that are going to be coming down, and this prior trend line. That's it for right now. If you have any questions, comments, concerns, feel free to leave them below. Don't forget to like, comment, subscribe on the video. If you found this helpful, please let me know by leaving a comment below in the YouTube comment section. If you have any ideas or anything you want to see for future content, future videos, please leave those ideas below. Let me know. Feel free to reach out to me at EveryTimeICash on social media. Feel free to reach out to me at EveryTimeICash on StockTwits. You can also check me out on my website, www.everytimeicash.com. You could also reach out to me on my website, www.everytimeicash.com/contact. Once again, thanks. We'll look forward to hearing what you have to say. Look forward to seeing how the market plays out tomorrow and the next couple of days. Just want to remind everyone to be patient. I want to remind you that a lot of times people say cash is a position, and that is often said in upticks in the market, and it's a very false statement. In this case, it's not. Cash is your friend. You're not going to get hurt by being in cash. If you think something can't go any lower, it definitely can. If you think something's already cheap, it can definitely get cheaper. If you think you missed something, you definitely didn't. Just be patient. Let things resolve themselves. Wait for things to settle in. And it's better to be late than early in this situation if you're looking for a multi-day trade rather than looking for a short scalp in the market. Once again, thank you. Don't forget to like, comment, subscribe. I look forward to hearing your comments. Look forward to hearing your input. Thanks again for your time. Catch you later.